Hey everyone, and welcome. Great to have all of you here for what I promise is going to be an exciting and entertaining show. My name is Asaf, and before we dive in, let's do a quick round of housekeeping. Feel free to drop your thoughts in the comments. Being passionate is terrific, but let's keep things civil. Also, if you ask when moon on a specific stock, then I'm legally required to ignore you. And now that we're done with the dad jokes, we've got a packed session ahead covering everything from the fun ride we all had in 2025 to our top stocks picks for the year ahead. Think of it as like you're investing cheat sheet, except it's not cheating because we're literally giving it out for free. So grab your coffee or whatever drink that you'll need for the next hour. Let's ignore notification and meet our participants. Lon, how about we start with you?
Hey everyone, name is Lon Jurisic. I've been in the market since 1999. I'm the founded StreetInsider.com, which was acquired by Investing.com about 4 years ago, and since then I've been running the news operation. I've seen every type of market, the dot-com bubble, credit crisis, and now possible AI bubble. Nice to be joining.
We'll get to that in a few moments. Thomas, how about we move over to you?
I'm Tom Montero. I'm the head of financial content at Investing.com. Sorry for the technical issue here. Basically, I'm saving the dad joke, so I'm doing those myself, or the dad UX rather. Anyway, so it's a pleasure to be here. I'm the head of financial content at Investing.com. Been in the company for 4 years, and I've been an investor since 2013 when I started growing my portfolio, and now I own about $2 million in stocks, which I manage myself, and I'm happy to be part of the team and discuss things with everyone here. So
Thanks a lot. And our special guest for today's webinar, Ricky.
Yep, thank you for having me. So my name is Ricky. I have a little bit over 1 million subscribers on YouTube. I actually started creating content on anything and everything investing nearly 10 years ago in my college dorm room. So fast forward 10 years, trying to stay consistent with it. I've had the opportunity to now work with Investing.com. So I'm very excited to be ending the year on a green note with you guys.
Super happy to have you with us today. Why don't we start with a quick overview of the agenda? We have a couple of people helping us to get through this. Diego, if you don't mind sharing your screen. Amazing. Let's move to the next slide, please. Cool. So we've just wrapped up our quick intro, and we'll dive into a review of the year that we haven't wrapped up just yet, but we're close to it. Then the main event, top stocks, counting them down from 10 to 1. And then we'll send you off with final thoughts and a special offer there. Next slide, please. And one more. Thank you. So when we're talking about 2025, quite the year. Um, Earlier on, we had Liberation Day tariffs hitting, and that led to extreme volatility that I think humbled all of us. But after a big drop and then a big correction, it was basically lots of Fed speculation and the recent talk of an AI bubble. Lan, what's your take on 2025?
Yeah, the key themes for me is still always has been AI. It's still a lot about AI. Then, of course, the tariffs, and then you mentioned the Fed. So it's hard to remember at this point, but at one point we were down 18% in the S&P. Now we're up over 16%. So on the stock focused themes, AI data centers, that was basically the biggest thing. If you take out AI data center growth, basically the U.S. GDP was flat. So you look at the S&P also, NVIDIA, Google, they made up a third of the gains in the S&P 500. Broadcom's another big winner. Then if you look at some individual stocks, just explains like the massive growth in data center. A company called Bloom Energies, which makes fuel cells. It's up 400%. Another one, SanDisk, which makes memories for data centers, and actually is on our Tech Titans AI pick, up 500% this year. So that was a huge theme. Another one was kissing Trump's ring. So with the tariffs, basically Trump wanted to bring back manufacturing to the U.S. So if you kiss Trump's ring and you you pledge billions in new factories, you got to hand out. And Intel is a perfect example. We're going to talk about that one a little bit more. Stock's up 100%. Look at some of the rare earth companies. They gave government stakes, MP Materials, and then Apple, Eli Lilly, TSMC. Those are some of the big companies that pledge billions. Also, we got a massive problem going on in Bitcoin right now. It started the year really strong. Now it's been fading. Big problems. One of the stocks, Strategy, which is makes these leverage bets, owns a huge amount of Bitcoin, but they leverage it by selling their stock, selling preferred stock. Stock's down 40%. So that's something, maybe a canary in the coal mine there. And then, of course, the Fed's started its rate cutting cycle again back in September, and rate sensitive stocks started moving around. So financials, home builders, consumer discretionary, things like that. So that's my rundown of 2025. It's been an exciting year, and we look forward to more.
Thanks, Lon. That was a pretty comprehensive roundup. Thomas, what's your take on the 2025 show?
Yeah. So not to be repetitive, I mean, obviously this has been, a fantastic year. It's an opportunity rich year like we haven't seen in many years. Obviously, the market has moved, basically 30% from bottom to top, which doesn't happen very often. It only happened a few times in history. And I think it speaks to, just the sheer volatility that we had and just the sheer amount of different situations that we went through. So this was a year, in which a lot has happened. But I think the main topic of the year, and for me, it's been, the US dollar. I think this was like the changing factor for the year. Obviously, we started with, we had a first half in which we had about a 10% devaluation on the US dollar. And that led to companies that have revenues overseas to post a type of revenue growth that we wouldn't be expecting in a different scenario. So I think this has been a massive tailwind for US-based companies. And I think this might be one of the problems for next year. And then, moving on to the AI situation, I think what we're looking at is basically a repricing of the AI cycle as a whole. Obviously, we have cycles, the business has cycles. And it seems like we're, moving past that first cycle in which everything was NVIDIA based, everything was just data center based. And now we're looking at different companies and companies that are, in a different and in the first part of the cycle, which makes things a lot different. So I think what we saw, with SoftBank and even Michael Burry, everything that happened on that end was basically just a repricing of that whole AI play to say, look, we've moved past, that first cycle in which everything was condensed into one company, and now we're looking at earlier stage companies in which growth is going to be bigger. So I think this is where we're looking at, in terms of next year. I think we're going to see a broadening of that trade rather than an end of that trade. I think this is what the market is doing right now. But obviously when there's repricing, there's pain. So I think we're going to see some pain going ahead, but it's going to be pain due to repricing more so than, type of bubble pain or, the end of the cycle. I don't think we're seeing anything like that, but we're definitely seeing a repricing, and that's going to be tricky. And then again, the final part is interest rates expectations. I mean, this has played a huge role. We haven't seen, we expected rates to be lower by this time of the year, and obviously the market priced in lower rates at the end of the year, and we're not there yet. But so I think this is going to be also another issue for the market. We're going to see if, depending on who Trump appoints, and again about kissing Trump's ring, the Fed is going to play a big role into that. Basically, who's going to be appointed for next year, and that's going to be defining for the market.
Very cool. Ricky, you do a lot of your trades, live with so many people chiming in. How was your 2025?
It's been good. I feel like it's been kind of more challenging to clearly explain to a lot of beginners that are just getting started that 2025 isn't so much just about fundamentals, but it's and I think Investing.com does a great job expressing this, is that if you have a good story and good price momentum, your stock can perform exceptionally well in current market conditions. My question is kind of more asking on the other side of what Thomas just hinted on or touched on, and it's, about this AI bubble. I am concerned, and I want to see if this momentum does continue into 2026, like he's saying, for maybe another cycle, or if a lot of these companies that fundamentally are either pre-revenue or actually losing hundreds of millions of dollars actually see a correction. I feel like, especially for a lot of beginners, the focus is always just like pump, 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 and they just want to continue to make more money. I feel like I try to take on an additional responsibility for the beginners that watch me and just do my part in taking risk management into consideration, which, based off of the tools that I have with Investing Pro, has made it so much easier to get a better understanding that not just technically the stock is performing well, but also fundamentally that it aligns with the proper price action. So that's something that I'm excited to learn more about in the up and coming months and in 2026 to see if it, is another leg up or a slight correction, is in the future.
Cool. Thanks a lot. And throughout all that noise that we've experienced, in the last 11 months, the 10 stocks that we selected a year ago, let me give you the spoiler, they did very, very well as a whole. Again, and I think this was maybe kind of reflects the entire year, because you have here a list with, two very, very extreme results. You never kind of get the average or the mean, but the way we constructed the list, we have our AI stock picker, the engine behind ProPicks, which all of our users are familiar with and rebalances mostly on a monthly basis. We asked Andy Pye, who's our VP of product, to kind of run it with a time horizon of 12 months. And we get a confidence level for all the stocks that it analyzes. And then we choose the one with the top 10 with the highest confidence. And we had this webinar, I think it was 11 months ago. And, looking at the performance here, one for the entire portfolio here of 10 stocks equally, with equal investment in each, just a tremendous return here, more than double the S&P. And again, in a very volatile year. So this is, it's interesting to see how the stocks that were picked kind of behaved throughout all of it. And we can see that, they did not behave equally. Thomas, what are your thoughts here on those?
Yeah. So, first of all, I was going to just compliment on something that Ricky said. Basically, I think that, one of the revolutions that we've seen over the past couple of years, but I would say this year more prominently, is basically the advent and the big leap in technological capabilities for beginner users in terms of stock market investing. I mean, we have, just a sheer amount of tools and offerings and data that we didn't have, back when I started investing in 2013. I didn't have any of that. We would need to go through, dozens and dozens of data sheets, and it was just so completely unreliable. So you didn't know stuff. And Lon can speak, more widely about that, I'm sure. But anyway, so I think this is a huge difference, because I think investors on the retail side have become more sophisticated, and I think this is what we're seeing in those lists as well. Is that we're seeing people focus their investments in better companies, and we're seeing better companies do better, and we're seeing bad companies not do so well as we expected, as we saw just before the pandemic, for example. So I think that there's a huge leap in there, and it's a technological leap, and it's an offering leap, and it's basically it's just made, it has leveled the playing field, and it has made everything and everyone so much better. So I think this is like the first thing I would say about what happen next year in terms of product, in terms of things that we can offer from the tech side. About the stocks themselves, I think this is I think we did a pretty good job last year. The three of us were here. That includes Lon and Jesse, who's not here today. But basically, I think the stocks that we said we didn't think were going to do well enough, that we thought were kind of tricky plays, they didn't do as well. And then all the other stocks, which were growth, more like growth focused plays, they did super well. I think Intel, I doubted on that one, so I got to give that one to Lon. But I think it's just impressive that the AI picked those names. Like I wish I'd bought all of them. I bought just a few of them, but I wish I'd bought all of them for sure. So maybe I'll just buy this year.
It's a good idea. I remember just before, I remember us when we got the list and we did the pre-show last year, all of us were kind of focused on Intel because, right, it came off like one of its worst years ever, right? So much value evaporated. What are your thoughts on this specific pick?
Yeah, for me, yeah, Intel was just the stock that was keep giving last year. So it was up 25%, then down to flat, and then boom, up to 100%. The government took a 10% stake. I mean, that's the huge story. So they got a new CEO, Lip Bhutan, who I really love. The company again, they missed everything. They missed mobile, they missed AI, but now they're kind of set up really well where Trump wants to bring manufacturing back to the U.S. Well, guess which company could possibly do that? Intel. So the foundry can get going. They can start making chips for Apple and AMD, NVIDIA. So that's the potential, and that's what people are playing on right now. And Trump just loves it. I mean, he shared a screen with maybe it was an Investing.com terminal on the White House desk, and he was trading Intel stock. So he just loves it. So that was just a wonderful play. When the stock goes up 100%, just gives you those opportunities. Great. KLA 10 core, and monolithic power. Those are just AI plays. KLA is, just great with AI semiconductors. They make the equipment, and it's all AI chips require this very precise instruments, and KLA just dominates in that area. And monolithic power, makes the power chips that go into cloud computing, AI computing, and they're also having a great year. So these are just this list. Turned out to be a wonderful list. Surprised Lockheed Martin, that was a down year in the defense spending. We thought that was going to be up more, but yeah, great list. Great product. When you can double the S&P, that's a huge win.
Yes, and I also think many of these stocks gain so much from the AI rise of this year. And let me give you a quick spoiler. 30 minutes into the future, next year's list is quite different. So, without further ado, I think before we start with number 10, just a quick reminder for our audience, the War in AI take that you see on the screen here on the right. This is something that Investing.com leaned into AI a lot this year, way beyond stock picking. Warren gives you kind of like the chat GPT for investors with tremendous analysis and based on so much data, both quantitative and qualitative. You can ask it anything, and new features are now coming to allow us to analyze charts and lean more into technical, which is a lot of what Ricky is doing. So the take that you see here is kind of the way it's summarized when I asked him to kind of look at the stocks that we chose last year, and give us kind of like the bottom line. So I think it does a really good job in nailing it. Okay, Diego, if you don't mind stepping on to the main event, and this is what everybody came here to see. So the picks you actually showed up for. A quick reminder before we start revealing the list. This is no personal financial advice, so do your own research to make sure any stock from this list matches your investing strategy and the risk that you are or are not willing to take. For each stock here, I will kind of direct the traffic so we get some analysis, and obviously everybody can chime in on the top stock. So with that out of my system, let's go into number 10. So Thomas, why don't you take this one?
Yeah, for sure. So this is an interesting stock, and I actually asked to take this one because it was a pro picks for last month. And it basically went up 62%. It was a very high conviction pick. And the way I usually use the product is I try to find stocks that are in many strategies. So they are, sort of higher conviction picks. And then I do my own research and see if I really want to buy these stocks. And this is a stock that I actually bought. And I'm super happy. I'm super excited to get the results, and happy to see that it's on the list for next year, basically. So I think this is the company that this is a huge turnaround play. Basically, the stock was up 62%, as I said last month, but it's still kind of flat for the year. So this is just to see what kind of first half of the year it had. It was just a horrible first half of the year. So, and what I think is really interesting here is that the company, and the reason why the company is growing, is basically it had the bad first half of the year. Why? Well, because basically it was spending a lot of money and it had a lot of churn in terms of its portfolio, right? This is a company that does medical supplies for basically blood and things related to those kinds of medical procedures. And basically it was down just because lots of pattern churn, lots of different products hitting the market, and they were spending lots of money and burning through their margins, right? But then when we look at the second half of the year, it just shows a completely different picture. Why? Because the company completed the transition, and it now has, first of all, nice cash flows, and it has also, the portfolio ready to go for next year. So I think, and I would say that the interesting takeaway here for me is like, we've seen that narrative. I mean, you can find a narrative anywhere, but I think what's really interesting is just you see the way that the narrative combines with the numbers. And I wasn't expecting to see that, because it's not often that you see a stock that's gone up, just 62, 70%, however it's gone up, in a month. And you look at the numbers and it's still undervaluated. I mean, it's I wouldn't go as far as to say undervaluated, but it's still fairly valuated. So this makes a huge difference. And why it's like that? Well, because of all the things that we're seeing in the narrative and the things I said before. So I think when you combine momentum with being a turnaround play and with the fundamentals, and you combine all those things, I think this is what the market is really trying to see right now. So it's not just anymore in this just putting this into the framework that we discussed earlier about the AI play and everything. I think what the market is really looking at right now, it's not just about momentum, it's not just about narrative, but it's about a combination of both things. So you have valuation, you have momentum, you have the narrative, you have everything combined. So I think this stock fits really well into that.
Thanks a lot, Thomas. We'll have more stocks around with interesting narratives as we move up the list. Why don't we, Diego, move to the next one? We have Align Technology, so another healthcare company. Long way to take this one.
Yeah, sure. So this is something that a beaten up stock, like you said, it's down 30% this year. It's down 70% over the past 5 years. At one point, was a hugely successful stock. They make the Invisalign dental system. So it's just been beaten up, and you can see why AI picked it. There is some stabilization there, so I tend to agree with AI. I don't think they're out of the woods yet, but there is stabilization. Last quarter, they've seen some growth in the key markets of Europe, the Middle East, and Asia Pacific. Also, they're seeing some growth with the teens and kids segment, 8% year-over-year growth. So, stock, you look at the valuation, and that gets interesting. So it's trading at 13 times next year's earnings, which would be about $11 per share. And in the past, it traded at 40 times. So, you can get a multiple revision here. And, even if the stock, like I said, just if they don't even earn more, it's just the multiple just increases, say to 20, the stock's up huge. So that's why AI probably picked it. I tend to agree with the AI. You just get a multiple revision on this, and the stock's up, 40, 50%. So, definitely something I see potential with this company as they stabilize and the management can continue to execute. So.
Thanks a lot, Lon. So from number 9, let's move to number 8, Microchip. Ricky, over to you.
Yeah, so you guys can hear me okay?
Yes, we can.
Perfect. Yeah. So Microchip, fortunately, they actually have their global headquarters here in Arizona, which is actually where I'm at. So I'm very familiar with this company. The thing, if you want to pull up the chart very quickly, it's ticker symbol MCHP. Although it's had a recent decline, and that's the thing that I really want to highlight on this. The reason originally when I saw the decline from highs of $96 per share, all the way down to the retracement that we saw to current lows of 53. It's a 43% retracement. And I pulled it up on Investing Pro, and I pulled up the pro research as well. And the thing that I really like about this is that it kind of tells the story on what's happening, not just on the technicals, but also on the fundamentals. And if you guys have a chance to pull it up on the screen, I'm not sure if you guys can, to be able to show the decline in revenue and the series of concerns that investors have had. The thing that I really like that Thomas said is it can be a very good setup for 2026. And I think that's kind of like the story that Warren AI might be telling with this, is that although it might not have had the best 2025, and we can see exactly why, there are actually a lot of, based off of my understanding for these pro tips, there are, let me double check. Yeah, analysts predict that the company will be profitable this year, which if you actually look at the pro research, it was this year that it dug a little bit into the red. It's trading at a negative PE ratio of 118x, and then a negative net income of 185 million. But that wasn't the story earlier this year, right? So we can see that although conditions haven't been favorable for MCHP this year, if what Thomas is saying and what many believe is that we have another leg up in this whole AI boom, again, I believe that then my MCHP or microchip technology can get a second win and a true chance to actually do very well. So I would like to focus for more confirmation on ensuring that market conditions will get better. And if I begin to see that uptick and that change of sentiment, just kind of how we've seen for the past like month, things have been a little bit choppy. It was almost unheard of to have like a red day, yet alone a red week. But the past 4 weeks have been more prone to pullbacks. So if that uncertainty continues to present itself, I wouldn't be super convicted in investing hard in MCHP. But if we begin to see a second wind for this whole AI revolution, I could see that conditions are super favorable. You have a company that is a well-established business. It's relatively down 40% based off of recent downturn. And if markets do push up higher, like we said, if you have a good story and good price momentum, it can be a very favorable stock or a winner for 2026. So something I'm very excited to learn more about as well.
Right. Thanks a lot. Diego, can we go back to the deck, please, and move over to number 7? Right. On number 7, Centene. So another healthcare company. Lon, how about this?
Yeah, so here we are, another beaten down stock. So AI is looking at these value plays, and value plays have been out of favor for so long. But this is a stock down 37% year to date. They had a massive profit warning mid-year, just put the stock into free fall. So it's been stabilizing a little bit. Here, this company focuses on managed care, mostly with Medicare, Medicaid, and the underinsured segment of the market. So it's just been going through just a major repricing here. But here we're talking about what's called a trough earnings play. So that means the earnings are bottoming out. So they had their cut, they had their guidance change, the revision lower, and now talking about things starting to stabilize. So it's a margin recovery story in the marketplace in Medicare, which could lead to earnings per share growth as it goes back to the mean. So they had this massive cut down, and now we're trying to get back to the mean. So this year again, it's going to be another tough year for the company. But if you look at the out years, the company's going to earn about $2 per share in earnings. By 2027, they can earn $4 per share. So basically doubling of the earnings per share in the next by 2027. And then if you look even further out, to $9 a share. So from $2 a share in earnings power to $9 per share in 2029. So if you start thinking about that, like this, the earnings are going to recover. Even if the stock just stays stable with the same multiple, the stock's going to go up. If the market rewards them with a higher multiple, then the stock could even multiply from there. So again, I agree with the AI here. It's not going to be a pretty picture. Like I said, the earnings growth doesn't kick in until 2027. But again, you're at that trough earnings where they're not going to go lower from here. You're going to have to ride through another rough 2026. But smart money managers will probably start putting money into play, seeing that earnings power for 2027, start buying the stock. The multiple recovers, the stock recovers. And if management can execute and those prices could stay with Medicare, Medicaid can grow and stay the same, then you have earnings power here. The stock can move. And again, it's the value plays that AI is picking right now instead of those hot AI stocks. And again, I think possibly it's going to be a stock pickers market coming up. And here's one to think about taking a look at and start maybe dabbling a little bit. I wouldn't throw all your money in at one point, but dabble in over the next year, and I think you'll be rewarded in 2027.
And I think one recurring theme that we can kind of already recognize is profitability. I think more stocks and their, transition for these companies from growth at all stocks at all costs, which is kind of what we saw last year, something a bit more um, old school, just good businesses that are turning things around, have a stronger narrative, and are looking to, generate shareholder value in the old sense.
Asaf,
Um,
would you mind if I raise the topic here before we move
yes,
on
go
to the
ahead.
next topic? Because we seem to have a lot of healthcare in this list, right? And obviously, healthcare has been beaten down, so there's a lot of value in there. There's no argument there. However, are we talking about just good companies within the healthcare space, or are we talking about a full recovery for the sector as a whole? So, what do you guys think about that? Where do you stand on that, if you have an opinion?
I mean, for me, it was, yeah, again, you have all the cuts in Medicare, the pricing, and, now things are going to stabilize. So I think, that's, kind of the play, the earnings power of these companies. You're talking about, Centene again. Go down the list. These companies were earning more money. So their earnings power has been going down. There's no growth in earnings. And that's why these stocks got beat. I mean, that's plain and simple. They all issue profit warnings. Say, hey, we're going to earn $4 a share, and then they earn two, and that's what tanked the stocks. And now again, you're talking about an opportunity to get back to the mean. So companies used to earning $4 per share, and it's earning two. It's getting back to that mean, and that's what's again, I think the AI's looking at is saying, hey, this stock was earning four, now it's earning two, now they're going to earn four. There's your play. There's your play. There's your opportunity. So.
I have a quick question, if it's okay for me to ask. In comparison to UNH, where does that go on your list in comparison to like something like Centene? Because in my opinion, UNH seems to be more of an established business, more profitable, but also in the healthcare space that took a 50% hit, but fundamentally such a well-ran business. So if you were to, again, pick one of those two stocks, which ones would make the most sense for you?
Me personally, you got UNH, you got Buffett in there. So that's, to me, it's like, that's a great person to follow. Of course, he's not running the portfolio anymore, but
Yeah.
that's one thing going for UNH, but it's in different markets. So UNH is more going, for the normal managed care, where
Yeah.
Centene is dealing with the government. So these are, Medicare, Medicaid. So it's a different marketplace.
Yeah.
So, and I think that, when you're relying on the government, that's different. So I think UNH, is recovering and now has the blessing of Buffett. So I do like that stock. I do own it personally. UNH, Centene is a company where again just got killed, just got absolutely murdered in their profits, and now they're going to recover. So again, something I'm going to look at. I like the AI pick that I'm going to, dig into more in Centene and possibly add it to my portfolio as well. But like I said, I do own UNH and I do see recovery there as well.
Yeah, I also
I,
own
I,
UNH,
oh,
and
sorry.
I
Yeah,
just added,
please.
oh, my apologies. I just added
No, no, please.
Centene to my watch list as well. It was a company that I was unaware of, and I think that's one thing that I like most about this Warren AI pick is that it can truly expose you to companies that were not in your radar by any means, but might align with your trade or investing criteria.
Definitely, definitely. I completely agree. But I would say that to me, I think Centene is the better play. That's just my opinion because mainly because when you look at the fundamentals, it just looks better. I mean, it has a higher upside, its fundamentals look more aligned. It's actually cheaper right now. So is it a better company? Probably not. But it's definitely more undervalued. So, and when we look at the whole, the way that the market is shaping up for next year, and as as you put really well on, as a stock pickers market, meaning that people are going to be looking at valuations a lot more as, obviously the AI trend or whatever happens, kind of broadens out, and we have, those capital inflows kind of looking for places to park their money. I think, the more undervalued these peaks are and these companies are, the more they're going to grow. So I do believe that Centene is a very good play in my opinion, and I think is a better play than UNA just because of the way it stands right now and just because of the valuation story right now. So
I just want to add one more thing. Like 4 stocks in, we're looking at much smaller stocks than we started. Like last year, you had, I think Intel was 10 or 9, right? And generally speaking, for the first 4, they are of their market cap is just way smaller. So again, an interesting angle of how the kind of the intake of AI and the output for this year up until now, at least, smaller stocks. All right, let's move on from number 7 to number 6. Peabody Energy. Ricky, why don't you take this one? You're on mute.
My apologies, I just didn't want to interrupt. So up 30% year to date. I'm going to be pulling it up on my charts real quick, and then also on Investing Pro. Give me one quick second. So, yep, ticker symbol BTU. When you look at, again, just looking directly at the actual Investing Pro data, we have a company that trades at a negative multiple of negative 104.3x its earnings. It's a company that has a net loss of 17.1 million, but revenue of 3.9 billion. I was trying to, get a better understanding. I was not familiar with this stock. I was trying to get a better understanding on what the take is when it comes down to Warren AI. But like you guys have said, is that there's specific sectors that this year have been very favorable for. When it comes down to just looking at the straight technicals, and that's all I have to go off of as of right now, with the highs of $34 or the lows of $10, again, if market conditions continue to support companies that, I don't want to call it irrational valuations, but I want to call it more speculative valuations, then yeah, I do see an environment for BTU to be a little bit more favorable. But if we begin to see the uncertainty continue to unfold and markets begin to retrace, I do not believe that companies like BTU will have the condition to continue to succeed just based off of its current levels. And I'm not looking at just levels for 2025. I'm looking at the week chart where I can see its overall highs back to 2017. Resistance at $40, support at $3. Again, when looking at that range, it looks like it's already had an amazing 2025. Again, it's really asking yourself, if you're incredibly bullish for 2026 and you think that momentum will continue, I can see why BTU would be in your watch list and in your radar. But if you see that there's uncertainty, then I wouldn't be surprised for a possible retracement, maybe back down to $16 to maybe $10 per share. That's my 2 cents.
Right, interesting technical analysis there. All right, we are done with the first half of the top 10, and let's go to number 5. All right, so this is a much more popular and kind of stronger brand, I think, at least from a consumer standpoint, than some of the previous ones. Thomas?
Yeah. So basically, I think this stock, it's Victoria's Secrets. Everyone knows the company, but I think the problem with this company, and this is a company that's been in and out of bro picks many times, and it's done well, then it's done kind of well, then it's been down. It's kind of a lot of volatility there, even especially for a company that sells actual, things that exist in the world, material things that exist in the world, which is interesting. And I think the reason for that is, basically it's a company that has lost a lot of marketing value and a lot of brand value. And basically why? Because I don't think they were able to adapt to the changing consumer conditions. Basically, their business model was basically you have a shop at every shopping mall, and everyone goes physically there and buys. But obviously consumer trends have changed so much, especially when we talk about more developing markets, which is also a huge consumer market for Victoria's Secrets. Um, so basically, I think the company has had a lot of trouble adapting to those shifting consumer conditions, and they haven't been able to take advantage of this the weaker dollar from this year, which is obviously a big factor, would be potentially a big factor for them. So this is one I don't fully agree with the AI. I think this has a lot of of issues, even though their turnaround is starting to pick up some momentum. We've seen that, and this is probably why DI picked up on it. It just saw, that momentum is getting better, even though it had a terrible first half of the year. Again, there was the whole issue with supply chain and tariffs. Um, but I think, even though, even though that's passed, for the markets and for most analysts, I think still, their business model hasn't quite, picked up on what the consumers are actually looking to buy. So I that's when I disagree with the AI. I think they kind of missed the boat there, and I think there are lots of challenges going ahead. Basically, it's next year. We don't know how the state of the economy is going to be. Basically, we don't know what's going to be in terms of interest rate expectations for developing markets. With a lot of Victoria's Secret's earnings power comes from. So it's a very challenging and it's a very volatile macro environment for Victoria's Secrets to keep growing in the way that analysts are pricing in. So that's why you actually see when you look at analysts' expectations, basically you see a lot of volatility there. You see analysts pricing it in, a difference of about 30% between what some analysts are pricing and what other analysts are pricing. So there's a huge difference, and I believe it's because of that. It's the one that's very hard to sort of nail and understand what's going on. So I personally would not buy that stock, but maybe I'm wrong, maybe DI is right, and this is what we like, and this is what we're here doing. So let's
Yeah,
see in about a year.
I got a quick just comment on the
Yeah.
stock. I didn't dig in too much to it, but think of the Sydney Sweeney effect. And she's not, if you look at AEO, American Eagles, with Trump, Victoria's Secrets is known for their models, right? And for the last 10 years, there's been this type of woke type of movement. So I'm not getting political here, but if you look at the American Eagle ad with Sydney Sweeney, and now you look at what's happening with Victoria's Secrets, things are, I guess, more normalized and sex sells, and that could be, I don't know if AI decided to pick it on that, but just to think about that, we're back to that environment, the Sydney Sweeney type of fact where sex sells again and people can put those in ads. So that is Victoria's whole stick, is models, the angels and things like that. So that's my 2 cents.
And don't forget, they brought back the Victoria's Secret fashion show. Big seller.
There you go. Exactly. Yeah.
Yeah, so just my 2 cents here. One, as you can see here on the screen, the fair value, which is another input that we have. You can see that the uncertainty is high, meaning we have different models to weigh in when we do those stock selections. Here we have a lot of uncertainty, right? And the spread is also relatively big. So perhaps suggesting there's there's a decent upside, but just the confidence that we have in this is low. And I think too many factors need to align properly for this to be like a high confidence play. Um, at least that's my take on this stock. But it's interesting to have consumer discretionary stock after we started with energy and healthcare, and so at least from a diversity standpoint of building your portfolio, an interesting selection here by our stock picker. All right, from Victoria's Secret onwards to number 4. All right, Huntington Ingalls Industries. Lon, why don't we talk about this defensive stock?
Yeah. So, here, some of these stocks have some Trump underlying theme, and here's another one. This company, of course, builds aircraft carriers, nuclear submarines, and Trump wants to rebuild the Navy, and he wants to build in the U.S. So this is right exactly what this company does. We want to have a bigger Navy. Everybody's in the entire world spending with the Ukraine-Russia war happening, and of course in Israel and Gaza. So everyone's spending money on defense. Trump wants to have the U.S. military the strongest, and of course the Navy the strongest. And it's exactly what this company does. So they had just posted record revenue. Analysts see low to mid-teen earnings per share growth over the next several years, while the stock's up 63% year to date. It's not trading at a massive multiple. So right now it's at about 22 PE multiple, which is, it's actually a little bit below the market. And you're seeing that growth. And again, you're seeing the spending, which is key. The governments are spending, and in this company, again, it's one of the few shipbuilders and works directly with the Navy. So I see this company as a great pick, a great way to add your portfolio. And it's not gotten too crazy. It's not running away from you. So a good opportunity.
I think like with every companies that deal with governments, right? So pipeline is kind of hard to predict, but once the contracts are in, they're pretty, substantial and tend to be for many years. I think that's something to play into. All right, that was number 4. So on to our top 3. Ricky, why don't you take on semiconductor?
I'd be happy to. So it shows that it's down 20% year to date. And if you pull it up once again on Pro Research, and also if you have a chance to pull it up on the charts, my apologies, it's ticker symbol ON. It's a semiconductor business where you would think, and maybe this is just me, but right off when I became aware of the stock, is like you would think that 2025 would be the year for this company to succeed. But it looks like since the middle of 2023, it's been on a consistent decline. Now, could it have bottomed already? I mean, you're looking, and then when you click on the Pro Research on Investing Pro, you can quickly see that there is a decline in revenue. And this decline, although it has slowed down, it's still declining quarter after quarter after quarter. So again, I would have to go with that. It's just I focus so much on uncertainty, more because I'm not fully convinced that there has to be another leg up. And if there is another leg down, I do not think that it will be a very favorable market condition for on semiconductor. But if we do see another leg up, again, it's already had such a substantial decline that it could be the perfect like alley-oop for 2026. It's been selling off for about 2.5 years. If they could really turn its fundamentals around, revenue can begin to uptick, then hopefully price action can also begin to follow, and hopefully we can see some higher highs and higher lows. But just on the technicals of what I can see on the charts and the fundamentals that I have access to on Investing Pro, although the fair value is showing 11% upside, when you look at the PE ratio of 63.6 times its earnings, declining net income, revenue has been on a decline. I don't see there to be huge indicators of buy right now. I would say that, again, if conditions become favorable, I would love the opportunity to invest on semi once I see that it's not just an idea, but fundamentally and technically, it actually begins to respond that way as well.
Yeah, I think Asaf, just looking at the list, we should call this, Buffett AI, because it's super contrarian, right? I think even when it looks at, AI plays, it's looking at contrarian AI plays. So this is just a contrarian AI play. Basically, it hasn't gone up this year, it hasn't gone up last year, it's just stable. So as the market start going contrarian and look for those, smaller, higher
Yeah.
growth potential AI plays, I think that's possible. That's what we've been seeing this last month or so, and it's just a hint of that. Basically, that's get some capital off of it, and this is basically what what SoftBank did. Basically, let's get some capital off realized gains into 3 years after into the AI revolution, and let's use that capital to find um, companies that are just getting started, that are in a different phase of the cycle. So I think this kind of plays into that still, even though we expected this company to be much further ahead by now, but they haven't done so. But maybe, who knows, maybe next year is the year for them.
Yep, definitely another interesting selection, and one that isn't trivial. On to number 2. All right,
Yeah.
so here we have Venture Global, another energy pick. Thomas, you want to take this one?
Yeah, so this is talking about turnaround plays. This is the turnaround play of all turnaround plays. This is down, 70% this year. This has been beaten down forever. And it has, basically what happened was, it spent a lot of money. Why is it down, right? It had to spend a lot of money modernizing its infrastructure, its plants, and it's gotten a huge debt burden. And what happened this year? Interest rates weren't lowered as we expected them to be. So debt financing, refinancing, and everything became much more expensive, and the company kept on digging up that hole. So basically, this is what happened up until now. Now, however, when we look at things in the future, most of the companies change, and basically in terms of renovations, in terms of if its infrastructure is completed, and that's still an issue. But if we're seeing a better interest rate environment for next year, then refinancing is not going to be a problem for them. And then they have backlog, they have infrastructure, they have growth potential, and they have everything in hand. And LNG is a great technology. This is something when the Ukraine Russia war started, we didn't expect. Well, I mean, the world was just buying regular pipeline natural gas, and this is the thing about wars, right? It forces the world to change really quickly. And now the world has adapted LNG, and it's all LNG, and the price has gone down tremendously, which kind of obviously frustrated Putin about, because his plans were obviously, on the other side, with thinking that prices would go up. So basically, this was a huge development, and it cost the company a lot of money because he needed to adapt to this development. But now that it's fully adapted, you look at multiples, you look at profitability, you look at revenues. It's just, it's just a clear play that just buy it and wait. So I would agree with the AI. This is something I would have never found myself. I mean, this is definitely something that the AI has surfaced. I would have never looked. So again, to what Ricky said, basically one of the coolest things is that it surfaces stocks. I think this is to me is the most clear indication of that. It's just a company that I would never think of buying. But when I saw it on the list, and especially at number two, I started looking at the fundamentals. I started looking at the numbers and everything, and they actually look pretty nice. If again, one small comment, if if interest rates look better for next year, so they're able to refinance those, that burden at a better rate. Because right now, if interest rates are at stay at above 3.5%, it's going to be challenging to them. So that's the one issue that I see. But if the cycle changes in terms of the Fed, and we think it's going to change, obviously, because Trump, it's going to put someone who's more favorable to his policies, then this is a company that I would see even doubling next year. And it would still be undervalued even after doubling, by the way. So just to say, how much of a turnaround play this is.
An amazing story, and again, ties back to the narratives that we started this list with. We hear so much of CEOs and kind of the boards about the turnaround and and adaptations that they need to do. And we work in software, so those things seem easier for us. But for companies, with serious infrastructure, serious workforce, these things take a lot of time and not always work well. So, but when they do, that's when you see valuations skyrocket. All right. Thanks everyone for the first 9 picks. I'll take the last one by myself. No, just kidding. But Diego, if you don't mind moving from number 2 to number 1. So Molina Healthcare, as you can probably reckon from the name, this is our fourth healthcare company. Why don't we do a quick around the horn here on your take on this pick, and then kind of take a step back and look at the entire list. So, Lon, why don't you start with this one?
Yeah, so basically, this is a sister company to Centene. I mean, they're direct competitors. This stock is even more beaten up, and it's the same thing. They're dealing with Medicare, Medicaid, and the pricing issues with that. It just almost, like I said, the same exact situation. They just did different earning power, of course, but earnings are going to trough out this year and into next year, and then recover 27, 29. So again, you're talking about earnings per share could double over the next 4 years. So that's your play. That's your opportunity here. Yeah, like I said, I do like it. Something you could scale into. It's not going to run away from you. It's not a stock that's going to just blow up one day. Scale it into it. I said, if you're sitting pretty and by 2027, the earnings should recover, and you should be sitting nicely.
Thanks, Lon. Ricky, what are your thoughts here?
Yep. So I just pulled it up on Investing Pro, and when Lon was talking about a stock that's even more beat up, I mean, he is not joking. If you look at the technicals, it's been on a consistent decline. And the question that I begin to ask myself is, why is Warren AI so focused on healthcare? And I really just think that, as markets, again, this is just me, as markets might becoming to be a little bit more uncertain, and although there are some semiconductor stocks that were picked. I think with how much was a focus in healthcare, I think to me it just solidifies like how much I want to pay attention to not fully rotate out of tech, but to consider companies something like this because in comparison to the other one, when I look at Investing Pro, it's a company that trades at a lower P ratio of 8.4 times its earnings. It's not incredibly expensive. Its revenue has actually been on an uptick. So if we pull up the pro research, that's one thing that I do find very attractive with a stock that is still declining. But of course, when you look at, if I'm not mistaken, the net income, it did see a slight decline. So this, in my opinion, would be a great stock with 40% potential upside according to fair market value, according to Investing.com, that I would want to add to my watch list. I would set appropriate alerts. And if I see the entire healthcare space begin to uptick, I think this is the most amazing part about the software is you always see beginners always looking for screeners or trying to find alternatives. And I think screeners can be useful. But when you have access to something like Warren AI, and then it can expose you to companies like this that I would never look up myself besides the UNH, right? Because I'm already invested in UNH. I've even before Warren Buffett, and it was something that already caught my attention just because of all the negative attention UNH was getting. I would never really come across companies like MOH, which is the ticker for this one, or Centene, which is CNC, which is the part that I appreciate most about this is that, I am now considering maybe creating just a separate watch list entirely and asking Warren AI what different healthcare companies would be great investments for 2026, because that within itself, if again, we do begin to see an uptick, it could make to be a great investment, even if I diversify myself, thinly with all of them.
Thanks, Ricky. Thomas, what's your take on this one?
Yeah, so I think there's a lot to talk about this one. Basically, a lot has been covered, but what I would like to focus on to begin with is the difference between talking about monthly picks, which is what ProPicks AI does on a monthly basis, and yearly picks, right? It changes everything. So I think this is a pick that I would never try to buy, from as a monthly pick. It wouldn't make any sense. I mean, it's the timing for this kind of stock would need to be like maybe a year or maybe 2 years, because obviously there's a lot going on. It's a difficult stock to bet on. It's we don't know what's going to happen in the macro in terms of healthcare. We don't know what Trump's going to do if he said he's leaving the Obamacare a little longer or getting some benefits in there. So there's lots of details that are sort of political and very hard to assess and understand and predict above everything. So I think this is a stock that for a monthly or for something that you're looking for a quick buck, this is not the name for you, most definitely. However, looking at the long term, and it's pretty simple and it's pretty clear that this is the beaten down. This is a cheap stock. This is a good business model that makes a lot of money, and that it's incredibly undervalued. So I think the disconnection between earnings and price is where this stock is where the AI is really seeing the opportunity. So I would say that this is the great play, but again, talking about those differences, and I think further to what also Ricky said, basically about the differences and about finding stocks in within the product and the quality of the stock picking, right? I think this is a very important distinction that we have to make here. Basically, just we're talking about a model that's using about 150 different investor grade financial models. So it's completely different from a screener, right? Which uses just a kind of 5 to 10 filters, which are just fixed filters, which are just inputted in there. So just the sheer quality of the stock picking is completely different, and it's really not comparable. So looking at all those numbers and all those different variables, which is what usually the funds do, I would say that this is a good play, and I would agree with this, with buying this stock. But again, looking at it for maybe 2 years, 3 years, I don't know. If you're looking for a quick buck, that's not the name for you, and maybe this is not the list for you. I would even say, just looking at all names, it's But maybe we can talk about what this means for the market as a whole. After we finish this.
Yeah, it's a great idea. Diego, if you don't mind, let's kind of zoom out and look at the entire list here and kind of talk about the portfolio as a whole for those 10 top 10 stocks. Um, I would say that, first we have four healthcare companies. We were all, I think, a little bit surprised by the amount, certainly given the past 12 months, right? So, um, well, let me ask you this, like, how much do you think that the lessons of 2025 are like the instructional manual for navigating 26?
I mean, I still think AI is the biggest underlying theme. But for me, I think it's going to shift from, okay, let's spend on AI to, okay, shareholders want to see an actual return on that investment. But AI is we're still in the early innings. So we're looking at not so much the Nvidias of the world, but now we're looking at how companies like the healthcare companies can actually use AI in their businesses. So that's the biggest thing. So if a company can basically, have one person do the job of 5 people, which AI has the potential to do, if the companies can figure that out, basically you can run 1,000-person company with 200 employees. Think about the overhead. Think about the earnings power in that case. Alternatively, you can have that same 1,000-person company do the production of 5,000. So you can either cut your workforce or just excel it. So those are the things you have to think about. And I think you look at financials, you look at healthcare. Those are the companies that need to put this AI into place to start earning money. So the companies that can do that the most effectively, those are the winners. And so AI is a massive theme, but maybe not the data center build out, but how companies are using AI. How can they be more efficient with AI? And that's the key. So, you're going to have to listen to those earnings calls. You have to read those transcripts to understand, what they're doing with the AI and how it's dropping to the bottom line.
Great insights there, Lon. Ricky, we discussed earlier, like kind of how you play 2025. When you look at this list and when you kind of, think about how you're going to play the next year, what are your thoughts there?
It really just made me rethink, like, learning also more from Thomas and from Lon and their different perspective. That's the part that I appreciate most about, honestly, I mean, I'm a guest here, but I really enjoyed hearing other people's perspective, because I think that's the biggest thing, where we often become so clouded in just our thoughts and the way that we think that markets should go. But I mean, I don't think 2026 will be anything like 2025. There are catalyst-based events that I really don't think will necessarily repeat itself, as they were very unique within itself. But I think 2026 is where we can really see, either from what we're seeing from this list, these AI companies double down because they are seeing the return on what it is that they are currently investing in, or a huge pause or backtrace, because, I mean, Mark Zuckerberg has said himself, a lot of these tech companies might be over investing into AI, and especially at one point, Wall Street is going to want to see that return. And that's why, when talking about these different healthcare companies, talking about Victoria's Secret, and just seeing how there's now just a shift, not just in market sentiment, but in culture sentiment, because that is the case, right? Can Victoria's Secret pull through and be a successful stock? Since its IPO'd in 2021, we've seen a consistent decline. And that's what I'm excited to learn more about, is to see these shifts, and not just to assume that they're going to continue with that same momentum, but to not be afraid to ask those difficult questions and hear different perspectives, which is the part that I love most, not just about this and hearing Lon and Thomas's, ideas, but also that's the whole point of War and AI, right? To get a different perspective, to kind of open your way of thinking into opportunities that you would have never considered yourself.
Thanks, Ricky. Thomas, we see a lot. I think I at least hear a lot about like a changing narrative here, especially within AI. Like maybe more mature kind of companies who employ it in different ways than what we've seen 12 months ago. What's your take when you see the entire list?
Yeah. So about the whole market, first of all, I think, we've seen it. We currently have 11 companies that are trillion-dollar companies, right? So 2 years ago there were no trillion-dollar companies. So it's that money's still gonna go somewhere. Even if we have, maybe a 20% drop, we're still gonna have lots of companies, and we're still gonna have the liquidity going somewhere else, or either stay in the same companies or move somewhere else. So that's the liquidity is there. And then we're talking about interest rates that are going to be lower again. We know the interest rates are going to be lower. Inflation's pretty much under control, even though it can tick up. But I don't think that's a main concern right now. So I do think there will be a lot of liquidity next year still. Maybe looking more towards 2027, it's going to be a more complicated market in terms of that if the cycle changes. But I think there's going to be a lot of inflow. So I wouldn't say that next year is a year completely risk off year, or a year in which we should expect the market to drop or correct. I do see, lots of growth levers for the market and lots of growth potential. So I think that money's going to go somewhere. However, there's going to be a lot of changes, and I think this plays into what you guys have been saying. Basically, it's we're getting more mature in terms of the AI play. Is the money going to go to companies that are more mature, or is the money going to go to companies that are getting started? And I think I'm actually seeing this the other way around. My personal belief is we're going to start seeing some of those big funds, big banks that own billions and billions of dollars in AI plays to start getting some of those profits, locking some of those profits from the 3 years of AI, the AI cycle that we've had already, and start thinking about the next year. So where are the winners going to be from the next cycle of the AI? They're not going to come, they're not going to be in Nvidia, because Nvidia, there's not enough money in the world. I mean, how much more Nvidia can grow? I mean, we're talking about another 100%. That's $4 billion. I mean, there's no money in the world. So it's so I do think that those big funds and those big players, they're going to start seeing into start going to start looking into those smaller companies with a higher growth potential, and start realizing some of those gains. And when that happens, there is a lot of pain. But as investors, what we shouldn't do is confuse that pain with a completely with a huge market correction, or with the end of the cycle. It's when it happens, it's really hard to see the light. But I do think that every macro indicator that we can look just shows that liquidity is still going to be there. Just shows that there are lots of trends to grow. M&As are probably going to start picking up next year, which is, I think, a growth lever that we expected for this year, and they didn't come. They came a little bit. It's been the best year since 2021, but still 30% of what it was in 2021. Correct me if I'm wrong with the numbers, but it's still a lot lower than it was in 2021. So basically, there's still lots of growth levers ahead for the markets, and I do think that sort of that whole repricing of the market that kind of the list shows, to me, is a little too conservative. It's not what I'm doing right now. I think there's going to be lots of opportunities. But I do think that a repricing is going to happen. So you can either play that, in two ways. You can go, conservative. You can go stable and look at this list with, maybe we'll be speaking in 6 months from now, and I'll look at the list. I'll say, oh, I was wrong, and maybe we're going to see those inflows going into other companies. But I'll tell you one thing that I'm not going to do. I'm not going to look at this, go through this, and not buy any stock. So what I'm doing right now is I'm logging into my broker account. No, not doing propaganda for them, and I'm buying the number one pick right now. So just to show you guys that I'm buying Molina Healthcare stock. I'm sending the order just to make sure, which is something I wish I'd done last year. But this year, I'm doing it, even though it's not my personal belief. But I'll give the AI credit for that.
All right, interesting real-time trading here. Let me give you a couple of my insights, kind of looking at the selection criteria. So I think all the companies here are much smaller, like market cap, than last year. We have no Applied Materials, Intel, or KLA here, much bigger than the ones we have right now. I think generally speaking, it's a much more conservative list than we saw last year. Which was more about like the AI plays of 2025. And it's interesting to see how like how Propix, our AI stock picker, is shifting its focus and confidence to different companies, either looking at, generating new momentum or just changing valuation of companies that have been hit real hard this year, but have a good narrative of, a turnaround. So I think those things are very different from, if I compare the two lists. Diego, if you don't mind, let's kind of also move to the next slide. So when I asked Warren AI to kind of analyze this list, it gave us, the balancing act between the aggressive levers here, right? So you can see it here, and also some defensive anchors, both in terms of the healthcare play, but also, just strong defensive stocks that have long government contracts and can play well, even if the market turns south. So an interesting portfolio and would be fun to revisit it. We did cover a lot today here, and from the chaos of 2025 and the new opportunities that are waiting for next year. Hopefully, you're walking away with some solid insights. At least we know that Thomas has one and already executed a trade on that.
I also
Um,
got a message from Barack, who's someone in the company that we really love. He's also buying the stock.
all right, so yeah, we're 2 for
Shout
2.
out to Barack.
Anyways, there are some interesting insights here and a few stock ideas to research further, as Ricky mentioned, so you don't spend your 2026 just vibing your way through the markets. I think that's going to be, a more challenging market in 2026, generally speaking, than we saw in 2025. Big thanks here to our incredible panelists for sharing their expertise. These folks are the real deal. Ricky, thanks a lot for joining us. Thomas, Lon, thanks a lot for chiming in with your insights and kind of the broader story of things. Before you go, Diego, can we move to the next slide, please? One, let's connect and keep the conversation going. You have our channels to follow on YouTube, Twitter, where we have a lot of conversations going, and elsewhere. And next slide, please. We are got an absolutely ridiculous Cyber Monday deal running now that you'd be kind of silly to miss. So head over to Investing.com, check it out right now. We still have like 2 hours for our Cyber Monday deal. So this is the best one you'll have for the remainder month. So go ahead now, or you'll be sorry you missed it. And you can
60%
give
off.
yourself, the opportunity to make better market intelligence and stock analysis than you did before. Yeah, go ahead, Thomas.
I was going to say 60% off. That's what you
60%
get
off.
right now.
Correct. Yes.
The way that I like to explain it, if it's okay, is all the information and all the software you guys just saw us use, a lot of it is based off of Investing Pro. And if you're trying to make more informed investing or trade decisions, with the 60% off, it breaks down to less than $8 a month. So ask yourself that, is being more informed worth $8 a month? And if it is, again, you can either sign up at full price or get a 60% discount.
Highly likely it's worth $8 a month.
Right?
All right. Thanks for joining us. Happy investing. And remember that past performance doesn't guarantee future results, but good research definitely improves your odds. We'll catch you next time. Thanks a lot for joining us. Ta-ta.
Thank you, guys.
Thank you, everyone. Bye.